If y'all made it this far, good shit. Keep going. Today we're going over internal to external liquidity, external to internal liquidity. And remove all this bullshit off the screen. Internal to external, external to internal. IRL to, let's do ERL, ERL to IRL. Liquidity, liquidity, liquidity. Face adding. But yeah, internal, external, external, internal. And I'll be basing this whole video off of today's example because I felt like today was a pretty good example of this, of internal to external, which is basically what formed my bias. And so since now you guys understand IFEGs, now I can start kind of going into why I entered here and why this would be a good play, right? So what is internal liquidity and what is external liquidity? First, internal liquidity. Internal liquidity is simply a fair value gap. That's all it is. IRL, and even better if there's a high within that fair value gap. Fair value gap. Internal liquidity, fair value gap. External liquidity, ERL, is a high or a low. Okay? Spinning, you know what's up with this? Option spot, let me fuck it up. Alright, so IRL, fair value gap, external, high or low. Why is internal fair value gap? Because a fair value gap will never be external liquidity. A fair value gap is always a point of retracement. So it's always going to internal. Let me just show you guys an example. Okay, so we have 2 points of liquidity, right? Fair value gaps and highs and lows. If you think about it in a range, like I've explained it before, the internal or wherever price is going to be retracing to will always be a gap, will always be a fair value gap, because they can't really be a significant high and low within a range, because it won't be significant. It could be considered internal or an intermediate term high or low, but it's not significant. That's not what the market's going to be targeting. It'll be targeting a fair value gap. So based on the example from today, what we saw was, okay, so price obviously overnight dumped hundreds of thousands of points, like 1,000-something points overnight, right? So obviously it's kind of shifted market to the downside. We know that we're getting some down movement, so it's kind of more of a bearish trend. So we want to see some sort of retracement or correction in the market, and we want to see what we're targeting in the market towards the internal. Because if this was the range for today, because I marked out my range, this would be my range for today, right? And what do you guys think would be considered external? What do you guys think would be considered internal? Liquidity, if we're talking liquidity. Remember I said there's only 2 types of liquidity, highs and lows, and fair value gaps. So if we're talking internal would be fair value gap. So we have a fair value gap here, and we have a fair value gap here. These are internal liquidity points. So I knew I wanted to see some sort of reaction off of an internal liquidity to go down to the external liquidity. What would be my external liquidity? Is this external liquidity that was formed as soon as this morning, right? Because why is this internal liquidity? Because it made a new range, right? We have a move down and a move up. It made a range, and so this would be my external liquidity. Anything outside of the range, the high and low where the range is formed, is considered external liquidity. And I think the market's going to continue going down because we have more targets lower. So in turn, I have a bearish bias. I think price wants to go down, right? If I think price wants to go down, I want to see some sort of reaction off of internal and then a move back to the downside. So that's what my thinking was today, right? So I come into the market at, let me see, what time was it at? 8 o'clock. I see this. What time is it? 7 o'clock. Okay, I see this, right? This is the time I come into the market, 8 o'clock. I'm like, okay, we just kind of created a new range because we have this swing high that created this fat ass BBC down. There was a BBC on the 4 hour. These three BBCs created these three BBCs down, making me more have more thinking that it's going to go down, it's going to continue lower, right? Okay, now I want to retracement to a discount because you guys know premium discount. I want to sell it at discount, buy at a discount, sell at a premium, right? So I want to wait until it kind of comes up to a premium or around equilibrium to look for a sell off. And all that is when we come into a, let's say in a sell situation, when we come into a premium, we're coming into internal liquidity because if we're retracing to a certain point, that means we're retracing to a fair value gap, internal liquidity. So we're always either reaching for internal or external liquidity. And so today we were reaching for internal. So I wanted to see a retracement to internal and a move back down to external because I had an overall bearish bias. So I didn't want to take any longs until we came back into. I don't want to take any longs or any plays until we came back into premium so I could see a short back down because my overall bias was short. So I wasn't looking for any shorts just yet because as you could see in this range, we're still in a discount because I said do not short at a discount. Always wait for a premium to short or around equilibrium. So my thought process here was, okay, I want to look for some sort of internal liquidity, a fair value gap somewhere to see a reaction. So in the morning, I saw this 4 hour candle right here formed a fair value gap in the morning, right? If we form a fair value gap overnight, and as you can see, it's at a premium and it's internal liquidity. So I wanted to see a rejection of this internal liquidity and then a move back to the external because it's always targeting internal going to external or going external to internal. Just like a liquidity sweep is external to internal, because if you think about it, we sweep a low, we want to see a move back up, and we want to target some sort of higher time frame liquidity above. And if it's always going to be targeting a fair value gap, if it's going, even though that doesn't have to be your target because you drop down to a lower time frame and target something on the lower time frame, the overall draw should be to a fair value gap. So if we, just like I said, liquidity sweep, if we sweep liquidity on a significant low, right? We sweep a significant low, we want to look to some sort of internal liquidity to target. So we get a liquidity sweep, we look up, and we're like, okay, let's see what's next. But so today, I saw that we were kind of coming back up, and I saw that we had a internal fair value gap. So I was like, okay, I want to wait for a price to target this area, and then I want to drop down to a lower time frame and find my entry model. I want to find that IFVG within that time frame, right? So let me go through my thought process today. So I'm like, okay, boom. We finally tapped this. Let me go back one. So 8 o'clock, 9 o'clock, I'm waiting on the 1 minute. Okay, boom. Price is not really doing anything. We have this fair value gap that is on, let me mark it out right here. We have this fair value gap that is at this high, this internal liquidity, and I know that as soon as it targets this internal liquidity, I'm looking for a move to external, because anytime internals is targeted and it's taken, my bias should be based on something going towards external liquidity, because it's internal to external, external to internal. So I'm like, okay, I'm waiting for this area to get triggered, then I'm waiting for a move to the opposite side because it's internal liquidity. So I see, okay, boom. We have this high right here that I just marked out, that 4 hour fair value gap. I'm gonna see what I can get from here. I'm sitting on the charts, waiting for something, not taking any shorts because I know anything's not valid yet because we're not in equilibrium, we're not in premium yet. I don't want to take any moves to the downside when we're still in a discount. So I'm like, okay, we're coming up, okay. Mind you, this is a pretty significant high on the lower time frame even as well. So we're waiting for this high to get taken on the lower time frame as well. So, okay, boom. My higher time frame target gets hit. We tap into the 4-hour fair value gap. We tap into the internal liquidity. So, we tapped into the internal liquidity. So, where should price go if my bias is correct? It should go to external liquidity. What would the external liquidity be? Not a fair value gap. It would be a low or a high based on my bias. So, since I'm bearish, I want to look for a low that I want to target. So my overall external liquidity would be this low right here. But I don't need that many points to make money. I don't need to be sitting on the charts that long to wait for 700 points to get touched. I just need my couple 50, 60 points in order to make money, right? In order to make however much money I want to make. So I'm like, okay, let me look for a less significant low where I know it's high probability to get targeted. So I see this low right here. As you could see, if you step back, take a step back, you can see a significant low that has the potential to get targeted. Since my overall bias is bearish and the higher time frame should be bearish, I know that if I target this low, it should get hit because it's in an alignment with my higher time frame bias, and it's in alignment with the higher time frame internal to external draw. So as you can see, I'm usually waiting on the 1 minute, but I don't really see any gaps. I don't see any fair value gaps to get violated on the 1 minute that are that significant. So I went to the 5 minute. I saw, okay, boom. We have this 5 minute gap. We just tapped into internal liquidity. We swept a significant high. We're in a 4-hour fair value gap. My draw overall, even though I do not have this to hit, I do not need for this to hit, is this low. This low is to the downside. So I know a IFVG, a violation of a fair value gap to the downside, will be my entry point, because that just invalidates any moves higher. Because I know if it invalidates this 5 minute gap, that means there's a chance that price, I don't know why my eye is twitching. Fuck that shit anyways. I know that what do y'all see that shit, boy? I'm on crack cocaine, boy. My shit keep twitching. If it violates a 5 minute bullish fair value gap, then it should continue lower, because that just invalidates bullish price action and it goes along with my idea. So I see tapped in the 4-hour fair value gap. Okay, boom, right? We tapped in, so my entry was here. So we violated this. So we swept this, tapped this 4-hour fair value gap. Now I know, since we violated this IFVG, since we violated this FVG, this fair value gap, now I know that I have a soft stop loss. My entry's here. I want to target this area right here. I won to like 1.5 around there, right? My entry's right here. So I think I sold 3 contracts, or 4. I sold 4 contracts. 4 contracts. I'm targeting, how many points is this? Targeting 85 points, 80 points. So I know at least to come here, I could hold runners to the overall draw, but the chances of price moving that much within one session is very unlikely. So I just want to go for the low-hanging fruit. I want to go for the easy opportunities that I know are very likely to get hit, because the overall bias is in alignment with my trade. Since I know the overall bias should be going to external liquidity, I know that this move should work and it should be pretty successful. So I entered here at around 11 o'clock during a macro session. Boom. Okay, I'm staying patient. I'm up 440. Boom. And then I have my TP at this low right here. As you can see, another example of internal external. As I've explained to you guys many times, that price is fractal. This happens on all time frames. It respects this internal liquidity on the 5 minute. It should now, since it's respecting this internal liquidity, it should run to the external liquidity, if that makes sense. Because you could treat the lower time frames the same way. It came up into this internal liquidity, and it should be targeting these lows right here, because this is considered the external liquidity, because it came up into the fair value gap, right? Boom. Boom, just like that, $710, and I'm out. And as you can see, you don't want to leave a position in, or you don't want to leave your positions in to wait all the way down. You can, but what's the point of being a day trader if you're going to be waiting hours? You just need to get in and get your low hanging fruit with the alignment of the higher time frame bias, and then get right out. You could wait and see what happens. As you can see, it chops around. Even though the overall draw is bearish, it could come back up in here. Come on, bro. It come up back up here, come back to your, yeah, but it just takes a while. As you can see, it's probably gonna continue lower. This is as I'm filming this video, this is where price is at right now. It should continue lower all the way to this low, but no one wants to wait that long. Like, you want to get in, get out, precise entry, you're good, you're out of there. Remember, internal to external, external to internal. Let me show you guys an example of external to internal. External to internal. Okay, let me show you guys another example of it. I'm gonna show you guys one more example of internal to external. Okay. So boom. We have this range. Let's go a little bit farther. Hold on. One second, guys. Don't mind my school slides. Okay, so boom, we make this range. Where do you think the internal draw is? If we believe that price wants to retrace and go back to a specific point before a move lower, because obviously we have this BBC, we're breaking structure, we're coming down to the downside. There's liquidity below here, a lot of liquidity to be ran. What are we thinking? We want to see internal liquidity get ran. So we have this huge fair value gap. We want to see some sort of move to internal, and then a move to external. What would that look like? Just like this. So we have a move to internal, and then the next draw, if we think that we're going to get a reaction to this internal fair value gap, what would be the move now? Internal to the external. So if this is the range, this is a low, and we think price is going to go lower, we want to see a move to here. So we have, this is the external, ERL, and then this fair value gap would be IRL, internal liquidity, external liquidity, right? So as you can see, this is the higher time frame. This is the 4 hour. So you would not take your trade. You would just form your bias off of this. So you see, we just got a move back into internal. I'm on the 4 hour, so I'm not taking any trades off this, but this is just to show you guys how to have a bias. I'll go over a more in-depth daily bias video, but this is just internal to external liquidity now. So, okay, boom. If I'm just looking at the 4 hour, trying to see the overall draw in the market, we're in internal liquidity. My bias is bearish because I think we should get a reaction off the internal liquidity and get a move down to external liquidity, because it's always internal to external. Internal. Now I see, okay, boom. We're reacting off this internal. Off this internal. We should get a reaction down to this external. Boom, 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 just like that. See? It happens every day on all time frames. External was ran after a move to internal. It's just like a wave. Boom, boom, boom. It's going to keep repeating itself. Boom, 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 boom. As you can see, there was even more models within this leg, which helps you even more. For example, you could even find an even smaller range. You could look at this range right here. You could look in this range right here, for example. We create a range. Let's say we go back here. This is because this is a 4 hour chart, so you're not going to be sitting on the chart for that long. So even though you have your overall move, your overall idea of what's going on, you could, if you're, let's say you hop on the chart on this day, because only 3 candles are, you're basically only looking at 3 4 hour candles within a day. All right, so this would be your range coming into this day. Now you see we formed this range. We have this external liquidity down here. You have this external liquidity down here, and then we have an internal liquidity within here at this fair value gap. So if our overall draw is bearish, like I said in the if we scroll out, if our overall draw is bearish, this fair value gap should get respected, right? This 4-hour fair value gap should get respected if our overall draw is bearish, and our next draw should be this external liquidity. So as you can see, boom, we respect it. Now we automatically run this external liquidity. It repeats itself over and over again. And I'm sure once we run, okay, boom, right here. Let me go back one. Let me go back one more. Okay, so boom, this is another example. Let's go from external to internal. So if we drop down to the 1 hour, we see, okay, we just swept this overall external 4-hour liquidity. Did we leave a fair value gap within this area? Yes, we did. We ran here. So I know that we should at least, if we drop down to a lower time frame, 1 hour, on my 1 minute, since I'm trading the 1 minute, I would want this to be my target because it's internal. We just swept external. Now we should get a move at least, even though it'll probably continue higher, we should get at least get a move into this internal liquidity. So my next target, if I were to go down to like the 1 minute time frame, I would be thinking, okay, boom, we just swept this 4-hour, 1 hour external liquidity. Now I want to go down to the 1 minute. Let me go back a little bit more. Now I want to go back to the 1 minute. Let me mark this out. And I want to target at least this high right here, because we just swept external. Because remember, if we just swept external, we were headed to some sort of internal. So now I go down to the 1 minute. Okay, we just swept a significant 1 hour price leg or 4-hour price leg, which was that external. Now I want a move to the upside because we're targeting internal. And that internal would be this 1 hour fair value gap, this high. So we should get some sort of move. I'm not sure if this will work, but this is what time is this? This is 1 o'clock. So this should work. This will be my move, this entry off of this IFVG. We see this IFVG. Hopefully this will work for the example of the video. If it doesn't, who gives a fuck? We have equal highs. Our overall draw is the 1 hour fair value gap. We want to see a move into that 1 hour fair value gap because we just swept external. Even though we did leave this low, that would be a reason for this not to work. But as you can see, boom, just like that, we tap into this 1 hour fair value gap. That was tough, my nigga. I'm tough for that, my nigga. I didn't even see what the play was going to be. But boom, exactly. This would be your play. Right? This would be your play. And you'd be targeting this 1 hour fair value gap. Just so you guys can see how much money you can make. You're risking, how many points are you risking right here? Risking 22 points, so 44. So you're risking probably around 5 contracts. Your TP is here. Be targeting around $500. 1 to 2 should be about, yeah, exactly. 1 to 2. Okay, I know that. Let me go over the process again, just so let me slow it down a little bit. Okay. Hopefully this is not too repetitive. I just want to get the point across. So you guys don't have to keep replaying this shit. Okay. I'm sitting on the charts. What just got swept? Sell side liquidity just got swept. This area right here. What is that also considered? External liquidity. Sell side got swept, external liquidity got swept. So what should I target now? should target internal liquidity. So I'm on the 4 hour. I know I'm on the 1 hour. I know external liquidity got swept. What is my target for the day? What's my target for that for whatever time I'm on the chart? We see that there's a 1 hour fair value gap right here. Don't mind this. Let me go back again. We see that there's a 1 hour fair value gap right here. We swept external. Okay, let me drop down to the 1 minute because I know my draw is internal, not external because we just swept it. My draw is internal, so let me target that internal liquidity. Let's see what we could do. Okay, boom. Now this is where I wait for my inverse fair value gap as a confirmation that price should go higher. So I'm waiting for this confirmation that price should go higher because we just swept external, we just swept liquidity, we just swept out all those resting orders of people's stop losses. We just swept all that shit out. So I know we should get a move higher. And we also on the 1 minute, and then I come in and I see, okay, boom. We have equal highs right here, and we have a 1 hour fair value gap. That's my overall target. So if we have equal highs right here, maybe I partial take some money off right here. And then my final TP would be right here, right? So I wait for a violation of this fair value gap. I'm like, okay, boom. Let's see. Violation. Okay, so now I enter the market. Now I buy 5 contracts. My idea is price should come up to this fair value gap right here. Boom. Oh, let me move this TP. Price should come up there. Should not violate that inverse fair value gap. Remember what I said in the last video. You see how it wicked below the inverse fair value gap right on this candle, but it didn't violate this box, so I still wouldn't close. I would close if this closed below the box. So boom. Excuse me. So first TP right here, stop the break even because we just swept this intermediate term high. Target up here, just like that. I am out of the trade. Boom. That's exactly how it goes in. It goes out day in by day out. I don't know what the fuck I am saying, even saying right now, boy. Anyways, you guys get the gist of it though. Internal, external, external, internal. Let's see if I could find another internal to external or external to internal move. Oh, we just swept that. Okay, perfect here. So let's say this was my range. Say this is my range, right? This is my range. I see price kind of bullshitting within this range, right? This is my external, this is my external. ERL, ERL. Okay, boom. I want to see, ideally, I want to see price come back down into here, into this internal liquidity, and then get a move back into this external liquidity. But let's see what happens. Okay, boom. We swept external liquidity. So I have a significant fair value gap right here, and I also have a fair value gap all the way down here that is untapped. So I'm like, okay, it could target any of these areas. Let's see what it does. Since it's swept external, I'm looking for internal now. So I'm looking for a fair value gap to get respected in. Okay, it tapped into this fair value gap. Let me go back again. See if I can find that entry within here. So it tapped into. So I'm waiting for it to come down at least into this higher time frame fair value gap so we can get a move back up to external. So now in this situation, I'm looking for internal. So I'm okay. I wait for price. I don't want to long anything right here. I don't want to long anything. Okay, we just tapped this internal liquidity. So if we get a violation of something like this, let's see if there's a good gap. So we have a 2-minute fair value gap right here. Hindsight, I know price went lower, but this is what I'll be thinking right now. If we get a violation of this gap right here, I'm going to long. Okay, boom. We swept this internal. We got into this internal fair value gap. I would enter right here. Even though the draw may be lower, but I would target something like up here to this external overall. But I could target some low-hanging fruit so I don't have to be in the trade too long, or just in case my idea is invalid. I'll move stop to break even at this point right here. And I will see how price will play out. Okay, boom. As you could see, as long as your trade is in alignment with the higher time frame bias, it should work out. So now this is a 1-to-1. I would possibly close my position here and be done for the day. But yeah, exactly. So this is internal, and now you're targeting the external, even though you don't have to wait, you don't have to hold your position all the way until the next external. That's just your overall bias. You want to target little areas that you think price can reverse from, or maybe come back down to your entry so you don't get stopped out at break even. So you target some sort of high or fair value gap, and then you're out of your position. Because shit like this will happen, where even though your bias is somewhat right, it could want to go down to a lower area, just like here it did, right? That's why you want to get out of positions at certain points, because you never know where market is going to target, even though this is very much in alignment with and very valid according to what price was showing you at this moment in time. But to see what this looks like on the higher time frame, internal, we just swept external, so we should be going to this internal. And since we are respecting this internal, my overall bias would be external. And so I go down to the 1 minute or the 2 minute lower time frame, wait for the IFEG, just like I just showed you guys. As soon as it closes, I enter my position, go for like a 1-to-1 or a 1-to-2. And then I'm out to play, right? Out to play right there. Now you just made $400, $500 based on how much you're risking. Now you're done for the day. It happens every single day, guys. Even though the overall bias, it wanted to target this internal liquidity down here, you're still somewhat correct, right? And it happens again. Right? Look, another example. So we set this external, even though this is your trade, the next day you could see this, because this is at what time? This is the 8-inch session, so you want to be on the chart hypothetically, but if you trade this time frame or you trade this kill zone, same thing happens. Comes down to this internal liquidity, and now since it tapped this internal liquidity, this is more of a significant fair value gap as well. There should be a pretty strong price move out of this internal liquidity if you get a reaction. So now your thought process is, okay, we tapped into this internal range liquidity. Now what's my draw? What's my draw? External range liquidity. This is external. This is where price should be targeting. So then, since we just tapped internal, go down to your time frame. to the lower time frame. You look for a violation of some sort of gap. As you can see, there's a gap right here. That if it breaks that target, that triggers my entry. Hopefully it doesn't leave. Okay, boom. Triggers my entry. A+ setup. Now I know since it violated this 1 minute fair value gap, bearish price action is invalidated. And then I target external liquidity. Now, like I said, you don't have to hold all the way into there because you don't need this much. You don't have to wait this long. You don't have to wait to see if it plays out this long. You could target different things. Like, for example, target on the 1 minute, you could target this fair value gap. You could target even as low as this high. You could target whatever you want. But for the sake of video, I'll hold to external liquidity to see if it works out. So I'll enter in, this is how many points? 78 points. I'll enter in like 78 points, 140, 240. I'll enter in like 3 contracts, risk like $400. 3 contracts, stop the break even at this point. Because this is an intermediate term high. Price shouldn't reverse off this high. If it does, then the price is not truly bullish. Enter here. Okay, now my stop loss will be at break even. Now this is a free trade, but for the sake of video, I'm not gonna move it. Now you target external liquidity. You could hold it, but I would be stopped at a break even. I'm not even sure if it plays out, but as you can see, you got the move. I'm not gonna keep doing it until, but you got the move, right? If you don't feel like waiting that long, you got a pretty significant move. Like if you targeted this fair value gap right here, you made about what, $400 just off, or I mean, yeah, around $400 in this 1-to-1. If you targeted this fair value gap up here, you saw that it tapped into this internal range liquidity. You wanted your overall draws external, so you're bullish on the higher time frame. Entered here at the violation of this gap. It gives you a clean move up. Exit at this. Now you're all out. Now you're done for the day. Hopefully that made sense. Hopefully this is a good video. I'm gonna catch y'all niggas. Be safe. Make sure if you have any questions, hit me in the Discord. Text me. Text my gram. Bro, why? Bro, I think it's because I just drank some coffee or some shit. My eyes twitching, boy. That shit is blowing me. Anyways, questions, hit my number, hit my gram. Hit me up on the Discord. I'm answering all questions. I'm gonna see y'all niggas though.